In January of 1980, the price of silver reached nearly $50 an ounce, the highest real price in modern history. But this was no ordinary market rally. Behind this meteoric rise stood three Texas oil billionaires, a small circle of international bankers, and one of the most ambitious financial schemes ever attempted. This is the story of the Hunt brothers and their failed attempt to corner the global silver market. To understand how three men nearly destabilized global financial markets, we must begin with their father, H.L. Hunt. H.L. Hunt was one of the richest men in America, having built a vast fortune in Texas oil during the early 20th century. By the 1960s, he was widely regarded as one of the world's wealthiest individuals. His wealth and his fiercely independent ideology shaped the worldview of his sons. Among his many children, three would later make financial history: Nelson Bunker Hunt, William Herbert Hunt, and Lamar Hunt. Nelson Bunker Hunt, commonly known simply as Bunker, was the driving force behind what would become the silver strategy. He believed deeply that the U.S. dollar was being systematically destroyed by inflation, by government debt, by reckless monetary policy. To him, hard assets, especially gold and silver, were the only true forms of money. By the early 1970s, inflation was surging. The Bretton Woods system had collapsed. The U.S. dollar was no longer backed by gold. The Hunt brothers became convinced that paper currencies would eventually fail. Their solution? Accumulate mass quantities of physical silver. The 1970s were a decade of extraordinary financial instability. Inflation in the United States soared, peaking above 13%. Oil shocks, geopolitical turmoil, and runaway government spending eroded confidence in paper money. Gold ownership restrictions were lifted in 1974, but silver offered unique advantages. Unlike gold, silver had substantial industrial demand. It was used in photography, electronics, medicine, and manufacturing. At the same time, above-ground stockpiles were shrinking. The Hunt brothers believed silver was severely undervalued. In 1971, silver traded near $1.50 per ounce. To the Hunts, this represented an unprecedented opportunity. They began quietly purchasing physical silver, not paper contracts, but actual bullion. Soon, their accumulation reached staggering proportions. By 1979, the Hunt brothers and their partners controlled an estimated 100 million ounces of physical silver, nearly one-third of the world's readily deliverable silver supply. They also began aggressively buying futures contracts, magnifying their market influence. This combination of physical hoarding and leveraged futures buying would soon send shockwaves through the global markets. As the Hunt brothers accumulated silver, prices began rising, slowly at first, then violently. From under $6 per ounce in early 1979, silver surged past $20 by September. By December, it crossed $30. And in January of 1980, silver briefly touched nearly $50 per ounce. The gains were extraordinary. In less than a year, silver had risen more than 700%. This rally attracted massive speculative capital. Small investors rushed to buy coins and bars. Jewelers, manufacturers, and electronics companies scrambled to secure supply. Coin shops ran out of inventory. Lines formed around bullion dealers. At the same time, futures markets became extremely unstable. Daily price limits were frequently hit. Volatility exploded. The Hunts had leveraged their position heavily, borrowing billions to buy even more silver contracts. At their peak, the Hunt brothers controlled nearly half of COMEX's silver open interest, along with a substantial share of global silver futures exposure, giving them unprecedented leverage over the price of silver. They were, in effect, attempting to corner the silver market. As silver prices skyrocketed, alarm bells began ringing across financial institutions, exchanges, and government agencies. The COMEX, the primary silver futures exchange, grew increasingly concerned that the Hunt's concentrated positions posed systemic risk. If prices collapsed suddenly, the resulting margin calls could threaten brokers, banks, and clearinghouses across the country. In January of 1980, COMEX and the Chicago Board of Trade took dramatic action. They implemented new emergency rules. Rule 1. Only liquidation trades would be permitted. Rule 2. No new long positions could be opened. Rule 3. Margin requirements were sharply increased. This decision effectively shut off new buyers and forced leverage holders to either post massive new capital or sell. The effect was immediate and devastating. Silver prices began to collapse. On March 27, 1980, a day that would become known as Silver Thursday, silver plunged from over $20 to under $11 in a matter of hours. The Hunt brothers faced catastrophic margin calls exceeding $100 million. Money they no longer had liquid. Banks refused to extend further credit. The Hunts were forced to liquidate massive positions, accelerating the very collapse they were trying to survive. At its lows, silver would fall nearly 90% from its peak. The brothers' empire unraveled. Within months, they were facing billions in losses, lawsuits, regulatory investigations, and financial ruin. In the aftermath, regulators accused the Hunt brothers of market manipulation and conspiracy to corner the silver market. In 1988, after years of legal proceedings, they were found liable in civil court and ordered to pay hundreds of millions in damages. Bunker Hunt filed for bankruptcy. William Hunt also declared bankruptcy. Their vast fortune, once measured in billions, was largely destroyed. Meanwhile, exchanges permanently changed their margin rules, position limits, and oversight mechanisms. The episode became a defining case study in market manipulation, excessive leverage, and regulatory intervention, studied in business schools to this day. To this day, debate continues. Some view the Hunt brothers as reckless speculators who endangered global financial stability. Men whose greed nearly brought down the silver market and threatened the broader financial system. Others argued they were merely investors responding rationally to a broken monetary environment, to inflation, currency debasement, and the collapse of sound money principles. Notably, after the Hunts were forced out, silver entered a 20-year bear market. Yet, inflation continued. Monetary expansion continued. Their core belief that fiat money could be systematically devalued would later be echoed during the 2008 financial crisis and amplified again during the pandemic-era money printing of the 2020s. Were the Hunt brothers criminals, or simply early hard asset believers who pushed too far? History leaves that question open. The Hunt brothers' attempt to corner the silver market remains one of the most dramatic financial episodes of the modern era. It reveals the immense power and danger of leverage. It shows how markets can spiral into euphoria and then collapse into panic. And it reminds us that no individual, no matter how wealthy, no matter how convinced, can permanently overpower global markets. The story of silver in 1980 is not just about money. It's about belief, about fear, about ambition, and about the fragile, unforgiving nature of financial systems themselves.